You ever been in a situation where you wanted to invest in a company, but some of the metrics make absolutely no sense to you? Like you're looking at it and you're thinking, what does this mean? What are these words? I, are you trying to scare me away? And you end up not investing into it? Well, yeah, that's me too, every now and then. What's up guys, my name is Darren Jackson, welcome back to the channel, and today we're going to talk about 3 investing terms I really think investors, especially if you're new, really need to know. It's probably going to keep you from being afraid to invest in something because you know what you're looking at, you know what you're talking about. I guess we can call this episode 1 because there's definitely more than 3 investing terms out there in the world that you're going to actually discover and that you need to know. But we're going to start with, in my opinion, some of the most basic terms. I really hope you guys enjoy this video. Let's get started. The first term is dividend yield. The best way to think about dividend yield is that it's a percentage of a company's profits that they actually just share with their stockholders in the form of checks. So you may receive those annually, semi-annually, more than likely quarterly is the most common, and every now and then monthly. It's a pretty cool source of passive income. You can really think of it as like a reward or kind of a gimmick depending on the company that's paying it out and what their track record is, because you may have some companies that aren't the greatest at giving dividend yield. You may have some companies that are. So you kind of have 2 situations you're dealing with. Either A, you're in a relationship with someone that doesn't really have a personality, isn't really outgoing, doesn't get along with your friends, doesn't talk much, doesn't ask you how your day is, but they're rich and they give you money every now and then, which I hope you're not in a situation like that. That's not really fair for either party. Then you have the other option where the person is outgoing, they're funny, they make you laugh, they have jokes, they tell conversations, they get along with your friends, your family loves them, and on top of that, they have a pretty nice stream of financial income in which they contribute to you every now and then. Hopefully you don't take advantage of that though. It should be considered the icing on the cake, not something that you specifically focus on. I mean, if you want to, you can. There are strategies for it, but at the end of the day, you want to put your money into the stock market, wait for however long, and take more of it back out. And you can only do that when the capital gains rises. So that's dividend yield for you. The second one is PE ratio, or if you're fancy, price to earnings ratio. PE ratio is an equation. It's the current share price divided by the earnings per share. Basically, it helps define what the real price of the stock actually is, as opposed to how much somebody is willing to pay for it. You got to keep this in mind, and sometimes I have to remind myself of this as well, is that the price you see in the stock market of a particular stock, such as, I don't know, Apple, is not necessarily the true worth of the company. That stock price varies based off the news that comes out for it, or lack thereof, but more importantly, how we respond as investors. So if Apple releases something really cool, we're all gonna think it's gonna do really well for the company. We're gonna buy in more because we want that profit. Reversely, if they release something that sucks and we think it's gonna cost us money, then we're gonna sell so we can take the profits that we can before we lose even more. Long story short, the PE ratio helps you identify a stock that's either cheap in comparison to what it's really worth, or a little too expensive in comparison to what it's really worth. I don't know if this is a great example, but it's like buying a Charizard, a holographic Charizard that right now is tens of thousands of dollars, maybe even hundreds of thousands of dollars. But keeping in mind at the same time, you could have bought a starter pack from Walmart for like $5 and luckily got it. Tesla is probably the Charizard of the stock market. Its PE ratio is ridiculously high. I'm pretty sure it's in the thousands. It also can mean, aside from the fact that it may be overvalued, is that it has a lot of potential and people are expecting a lot from it, which is why they're buying it more, which is why the stock price is going higher. And they've been doing really amazing right now, so it kind of justifies itself, but it's something you got to keep a lookout for every time. Speaking of the equation of the PE ratio, which was the current price per share divided by the earnings per share, the earnings per share would be the third thing we're going to talk about, or EPS for short. Even though it's part of the equation of another term, it's really important because you're going to see it a lot. If you invest with brokerages like Robinhood, which is probably the most common brokerage app out there, you're gonna get a quarterly earnings per share post from every company or stock that you invest into. Earnings per share is basically a definition of how much that company made. The higher the earnings per share is, the better, because it's inversely related to the PE ratio. and you want the PE ratio to be as low as possible, which means it's undervalued, and based off the information that's given from the company, it's probably an amazing steal and you need to buy this right now. EPS has its own equation. It's the net profit for that period of time, so for a given quarter, divided by the outstanding shares, aka how many shares that company has within the stock market right now. So basically it's telling you at the end of this quarter, every stock increased by $1. And if they have 1 million shares, and that means we made $1 million this quarter, which is really good. Now that was really quick, but keep in mind those were 3 terms out of the ginormous amount of terms that are out there that will make you a better investor. But I want to go over those because those are some of the most basic terms that I feel like every investor needs to know, which will help them be more confident on purchasing certain amounts of stock because you have a little bit more information. But of course, there's a lot of other information that on top of these is best to know before you make decisions, especially with how much money you're dealing with. So definitely leave a comment below on what terms you feel like I should help define that you may not understand, that you've come across and you're like, what? And I'll do my best to help you guys out. But obviously I have some other terms I'm going to release in another video. I really do hope you guys like this video. Make sure you leave a like, and it'd be awesome if you guys subscribe so you can tune in to some of these other videos. Speaking of which, please watch some of these other videos, which I really do hope help you on your investing journey as they have in mine. I appreciate you guys watching, and until next time, take care.